Ladies and gentlemen, we have such a live stream to go through. There's so much news. I literally just posted a video like 3 minutes ago or something because I had like 10 minutes before I went live. I was like, I need to record this, edit this, and get this out real quick because the news is crazy. All right. Mr. Noto did not sell. So this is what even I got confused about this. Not like, I mean, of course I got it wrong because I'm an idiot that way, but this is crazy. So he is selling shares. This is what's happening. Anyway, let's get into it. We have a lot to cover, okay? Brand new 52-week highs, SoFi, Robinhood, Bitcoin's hitting new highs, $106,000 in Bitcoin, throwing, Robinhood through the roof. The Robinhood weekly will be at 9:30 tonight, so get ready for that as well. But let's talk about what just happened from the insider trading, insider purchases. Hey, hold on. Now, let's go ahead and go through what is actually happening, making this stock rip past $17 in 24-hour markets right now. First of all, Eric Schopenhauer, or however the heck you say his name, the executive vice president of the borrow department for SoFi, or the lending department, okay, the guy that oversees the personal loans, home loans, student loans, everything, just tripled his amount of shares in open markets. This is a purchase. This is an open market cash purchase. He bought 30,600 shares of SoFi at $16.34, or essentially the dip that happened today. And now he has 46,000 shares. So before he had roughly around 15,500, and now he has 46,000 shares. He tripled his position, ladies and gentlemen, through a cash purchase. He's been in this company for about 6 months. I guess what they're seeing right now is that the loan platform is just exploding potentially, and a lot of things are going very well. Potentially, they're seeing a lot of forward signs that 2025 is going to be a very good, quarter for them. Everything is looking great here. Okay, this was great. And then after that, we saw this get followed up by another report that Anthony Noto himself, a person that has 8.5 million shares or $144 million worth of stock in SoFi, is selling essentially 2 million shares or 33.76 million. Now, I'll be very frank with you. I'll tell you the truth in a second, but let me hold you here in suspense, okay? Anthony Noto, this is who's selling shares. These will be sold, okay? Number of shares, this is where it's a little bit finicky. We'll talk about this, but this number will stay consistent. 33.76 million shares will be sold by Anthony Noto, 2 million shares. Don't look at this. This is the outstanding of the company. But anyway, these are all securities that he has acquired from restricted stock units that have vested, okay? So with him being the manager of this company and being the CEO, he has received a lot of shares. Now, he has 8.5 million shares, and this is a deal to sell 2 million. But does he have to sell 2 million? This was the confusing part. We had to go all the way down into the remarks here to find out what is really happening. Okay, let's look at this. The shares noticed in Section 3C of this Form 144 are subject to a prepaid forward sale contract between Anthony Noto and the broker named in Section 3B, or Goldman Sachs. The contracts will provide for an upfront cash payment to Anthony Noto based upon the market price of the shares. Upon the expiration of the contract, Anthony Noto will be obligated to deliver a specified number of shares based on the then current market price at settlement. Okay, we don't know how long this deal is. I assume it's going. I have a grand conspiracy theory. Okay, but essentially, Anthony Noto is not just going to the market and selling his shares, which would be the normal thing to do. Whenever you see like CEOs, like big CEOs that stocks are running, like it's normal for Vlad Tenev to be selling shares, for Alex Karp to be selling shares. The list goes on and on and on. Jensen Huang, a ton. Anyway, this is not what Anthony Noto's doing. He's lending out his shares and saying, hey, I want $33.7 million today, and I will give you the amount of shares that make up for that money plus some interest, because Goldman wants, their fair bite at this too. But I'll give you the amount of shares that pays for 33.7 million in the future. I assume that this is going to be over 2 years of length. And what we're going to see here is if SoFi, because this was done at a $16.88 price, if SoFi drops, let's say to $8, for example, for easy math, $8.44, Anthony is not going to owe 2 million shares. He's going to owe 4 million shares. So this would be a terrible deal if he thinks SoFi stock is going to fall. But if SoFi stock perhaps goes to $33 or $34, he might only owe 1 million shares of SoFi, okay, while still receiving $33.7 million for himself today. So this is a forward contract of him being very bullish on SoFi's stock price over the foreseeable future in the near term. So he will be selling shares unless baked in, like, we don't know the terms of this deal. The terms of this deal might be, some sort of convertible stock deal, similarly to what SoFi stock did to themselves. He could be writing one for his own amount and say, hey, if I want, I can buy this back. Because that could be part of the deal as well. He could be writing essentially a call on SoFi, and he could be using this, like, you want to get really conspiratorial? He could use this $33 million and go out and buy SoFi shares with it, okay? And say, hey, I'll give you the money back whenever, 2 years from now. This could be like what SoFi did with their 2029 convertible note. Now, let's get even more conspiratorial. What is up and coming? Obviously, 2025 supposedly a good year. 2026, hopefully. I mean, like Anthony Noto said, Trump is going to be very bullish for their company. Okay, but 2026, he believes, or he's betting on receiving a lot of shares due to performance-based stock units for the stock hitting $25, $35, or $45. Okay, so is he sort of preparing a even larger bet, or potentially just the tax obligation that would be him receiving a $25, $35, or $45 performance-based award for SoFi stock going up? It's like us buying on margin, Josh says. Exactly. So either he's just selling for some reason, and even that he's still doing it on margin. Like whether you think of it as a sale or as some sort of deal to be more bullish into the future, it was the most bullish way to sell shares. But what does he do with the money now? Why does the boy need $33.7 million? Is he going to make a further bet on SoFi? Is he going to cover his tax obligations for his performance-based stock units in 2026? Either way, he's making a massive bet that the stock price is going to go up into the future. And matching that deal is Eric Schopenhauer. What was his name? Schopenhauer? Eric Schopenhauer. He's also making a $500,000 bet that there's no there's no deals that we have to read through. He just made an open market purchase of this stock today whenever it dipped. So if Anthony Noto was negative on this company, why would one of his closest confidants be buying a $500,000 purchase in this company? And I couldn't find anything on Eric. He has no net worth out there. He doesn't seem to be this, large investor or something like this. I'm sure it was a large purchase for him, or at least his net worth is a lot less than Anthony Noto's. So this is crazy. And the only thing that I can see of sort of backing up this data is just them believing that the macro, or what they're seeing internally, is going to forward this deal. If they thought that there was going to be bearish things happening into the future, none of these two people would be doing this. The people with the most amount of information, I mean, more market data than like other capital market distributors in debt markets. I bet Anthony Noto has a better insight into SoFi than JP Morgan has into SoFi. If that makes sense. So unbelievable. Yeah, I don't even want to. I'm sorry to the guy. All right. Names have never been my strong suit, and I also was not reading it during the first part of that read. So I was going off memory, and I just remembered it was long. I am so excited to hold SoFi stock. What I think is going to happen is Tevis is going to end up putting out a video and say, hey, I ended up selling another large portion of my stock. And this is why the world is giving this to SoFi right now. But to all the people that whenever we were going down to 15 and everything like this, and they were saying, hey, this is going back down to 8, we're heading back down to the 6s, all the bearish people that said they sold out of all their shares, you guys were just like, well, one, we hit $17 today and we closed at 16.88. You're factually wrong. In after hours, is that where we're at right now? 1736 in after hours. But yeah, we don't know the length of time for this deal. I'm going to assume it's over 2 years, because if he's making such a small loan, like, I mean, like a year or something like this, or even 18 months seems really short, you're almost trying to time the market. So I think that there's going to be like a decent amount of length, but not over 4 years, not past the Trump administration. That's my bet. And also with this, he's also expecting probably short-term benefits too. Because if he thought that the 25 basis point cut was not coming, that would put a lot of stress onto SoFi stock. So why not just write this deal with Goldman if you thought that that was going to come December 18th? So I think that he's also front running that. So this is how I'm thinking of this. I think one, Anthony Noto, in terms of his talks and expectations of rate movements, he's been like nearly perfect. So I do suspect that this is also a December 18th 25 basis point cut for SoFi. I think that Noto buying a hood. I think that he also believes that he's getting his performance-based stock units, exactly, Rat Pack. And I think that, you know, he could potentially be covering his tax expense. If we see him come out tomorrow, I think that we're going to see a lot more details on this as well. I'm surprised that whenever I didn't whenever I didn't post that he was selling his shares, that he didn't DM me and be like, hey, you're wrong, you should probably read the bottom. But we might end up seeing some more clarity on this tomorrow. Now, the interesting part about this as well is I was talking to a couple experts in this field, and they were saying like, hey, if this is a loan and he does in his contract have the ability to rebuy these shares, he doesn't have to write a Form 144. Meaning like he doesn't have to be transparent about this sale until the time of the sale. Okay. But Anthony Noto has been known to do this, where he will essentially communicate with investors through these legal forms. So I don't find he comes out on these podcasts too often or does these sort of things, but he'll do these things where he'll post about like his, like, so if you know, he's been making a lot of like purchases of SoFi stock on open markets. Like he did that a lot in 2022 and 2023. During those times, he didn't have to report it to the SEC. Like I think it's a 24 or 48 hour mark, but he was doing it like same hour. Well, why would you do that other than to signal to the market that you are doing this bullish action, right? So if he didn't need to put in this form, is he just doing this to give extra transparency and say, hey guys, this is like look at the remarks at the bottom. This is a deal where we're setting up a loan. I'm not selling into the market. This is essentially, you know, to make an even more bullish statement than just selling or just buying in general. Like crazy. Noto probably reads Tanner's post and says, does this guy know how to read? I'm not even sure I do. I think I might be dyslexic and also ignorant to read the rest of the report, but I don't care. Okay. Whether I can read or not does not let me have less shares in SoFi, and these are pumping, baby. So me and you are on the same team. All right. All jokes aside, awesome stuff. Anthony Noto sold 2 million shares at 1688 today, and this will give shareholders a reason to sell now. Michael, I see you in the chat nearly every single day, and I don't even think you're watching. I don't know what you're doing, but please go back and you always say stuff like this. This goes 100% contrary to exactly what I just said. Like, I don't. We accept dyslexic Tanner. Thank you. Appreciate it. Yeah, it's not a reason to sell. And that's why in after hours right now, or in 24-hour markets, you're seeing the stock pump because other investors, unlike myself, actually read the report. You know? Oh my gosh, super exciting. Super exciting. What I really think like Anthony Noto is one, he is actually, he does have the Goldman Sachs background. I think that's why also he gets a lot of like he goes through Goldman Sachs a lot and not other investment banks. But like he understands these games and makes very bullish, very aggressive bets a lot of times. Whenever he was buying, like he was buying in the, seven, or well, it started at 9 and then all the way down to $4. Like he made a massive purchase in the $4 ranges and everyone called him crazy. Like the dude bets on himself, let alone the restricted stock units and the potential performance-based stock units that he's going to receive. He's then taking his own money, for which he only makes like 1.4 million, only 1.4 million a year, subtract out all his Californian taxes and everything like this. Like, it's not a lot left. And then he's making millions and millions of dollars worth of purchases into the company back in. And then whenever he goes to sell, he's not selling in open markets. He's selling like saying, hey, in the future, this company is going to be worth way more. All right. Do you think he's worried about fair value marks? Do you think the executive vice president that runs the borrow division is like, oh, well, prepayment is certainly going up, Oh, well, like we're seeing in our things that capital markets, like loan platform business, is cannibalizing our regular wholesale loan markets. Why would he buy $500,000 if he saw bearish points in the market, if they weren't taking market share? If other companies like Affirm, Lending Club, or any of these were, or Lending Tree, or any of these were taking a larger market share in the future? Why would you put $500,000 if you are one of the more expensive fintechs in that place? Who is still buying? Well, I'll tell you who's buying. It's SoFi insiders with much more information than us. Anthony, brother, you're lost. You're lost. Go back and read the bottom of it. Okay, go all the way to the bottom and read the remarks, or just go back in the video and actually listen. No, but here's the thing: this 2 million shares are not even being sold. You won't be able to buy these shares. He's essentially just putting them up as collateral. He's saying, "Hey, eventually I will sell these," but we don't even know the terms of the deal. It might say, "Hey, I might be able to sell this, but I also will be able to buy back these shares at, who knows what the market value percent that Goldman Sachs will want him to repurchase them at." But he could be able to repurchase those shares and not sell anything. He could just be taking out a loan and essentially like margining up on SoFi. What if they're getting so many bullish signals through their lending department that they're like, oh my God, like 8.5 million shares of SoFi isn't enough. I need to go on 2 million share, like a margin on this and potentially repurchase this from Goldman later. Putting up shares as collateral is how rich people get richer. That's true as well. You know, this might just be a tax play. 100%. Yeah. Don't got to pay tax. Yeah, 100%. This could just be as clear of day a tax play, but I am looking at all angles here. What it isn't is uh a negative sign, or else he would have just sold shares, but he didn't. Like, he could have absolutely sold shares, and the amount of like purchases going into the market would have eaten up his 2 million. That's not what happened. It's fully within his right to sell 2 million shares of SoFi. Now, B-dubs, this is true. Like, or it's not true, but could this be the case? And then I had someone message me and say, well, this might be insider trading. And I don't know. I don't know that to be true. Like, is it one thing, one moment that is happening? Like a top 5 I really do think it's the lending department, because it also coincided with the borrow guy buying 500,000 shares. Okay. So I don't think that it'll be like a Galileo thing, because you're not seeing like this massive purchase come from Derek White or Miguel Santos or any of these guys. You saw it from the guy that's running the lending department. And debt markets are skyrocketing. Like we showed off the Affirm loan that ended up happening here. I can show this off too, or the Affirm sale. So this was just another crazy one. So I have to remove that. Don't want to be giving away my next videos. All right. Affirm and Sixth Street announced a long-term capital partnership to invest up to $4 billion in Affirm loans. Every loan company is selling loans, and this is before any sort of indication of another 25 basis point cut. So markets are heating up. That's the largest deal to sell loans that Affirm has ever signed. Okay? It's reheating. And on top of that, Anthony Noto is essentially, or all of SoFi team is essentially also seeing 10 million members of SoFi rather than the 2 million that they had back whenever the lending department was doing really good back then, when student loans and personal loans were hitting at the exact same time. We had like less than 2 million members. Now, to be fair, it was mainly lending people then, and now it's mainly financial services people here. But financial services people shouldn't be looked at as financial services members. What they should be looked at is a way to get lending members at a low customer acquisition cost. That is the financial services productivity loop. They show it off in every single earnings presentation, and everyone that has been into SoFi has sort of disregarded it over the last little bit, because it's taken a bit to get started, because we were capitalizing on it in a bad macro. But what if we don't have a bad macro anymore? You know, what if 55 to 80 cents really, like, truly is not that bullish? Or I don't want to say that. I'm not coming out to say it's going to be $3 or $2 or something. But even if it does 85 cents, 90 cents, that is going to blow away Wall Street expectations. All right. I'm not coming out and saying this marks a $75 price target on SoFi, $100. I think that's silly. Okay. What I do think that this marks is that 17 is not the top, or at least insiders are not seeing this as the top. Doesn't mean that they're right. Even insiders can buy stocks at highs. Okay. But I am not betting on the fact that they're wrong. They've never missed their mark since being a public company. Okay. I'm not going to start assuming that this happens now whenever things are the brightest for SoFi. I've been holding this company for years, and it's been constantly like challenge after challenge after challenge. And now is the time where people want to sell, is whenever there's no challenges in front of us. When student loans, home loans, personal loans, everything is needed right now. That's when we sell? No, man. No. No, I think that there's times when markets get very excited and a lot of stocks go up. Okay. I'm not saying that retracements won't happen, but I also think that historically bull markets go on for long periods of time, like on average, like 7 to 10 years. Okay. It's not going to be this one year was so good that next year means that it's terrible. There might be slower years, but it doesn't necessarily mean that they were negative years. I'm just saying every time that people come and watch my channel, the one thing that I can try to promote is like long-term holding of unbelievable companies will make you richer than any sort of trading. And there are people, I honestly believe that they are designed, like they're not even real. Like it's designed to make you think that the grass is greener, right? It's designed to make you want to invest without patience. It is the wrong way to look at it, in my opinion. Okay? Hold great companies for the long term and you'll be generationally wealthy. Okay? This is exactly what SoFi, I hope, becomes for my portfolio. A company that I hold long enough where it becomes a dividend-paying buyback machine like the other current banks that exist. Except people won't want to bank with those current banks because the tools that SoFi offers you are not only equivalent to what the current banks offer you, but are much better. Okay? Not only that, they also supplement all the tools for every single financial service company around. That so far looks like it's happening. Lincoln's making an appearance. I don't know if you guys can see him. I think he's trying to get out because my door is closed, but he's not getting out. All right, I'll let him out. One sec. All right, I'm too hyped right now. Buy good companies, hold them for the long term. All right. All right, let's see what else we have today because this is not, oh, well, do we want to show this off? Some other news that happened for SoFi, they were showing off the TGL. Tiger Woods was in the stadium. This is going to be their next customer acquisition play. We always talk about 10 million members. That's not the goal. Okay. It's very hard for people to try to fathom, compounding annual growth or S curves that build off of S curves. Well, one of the things that SoFi is trying to do is not just lend out to their 10 million members. They want to lend out to 20. They want to lend out to 30 million members. How do we get there? And so they ended up going and getting another stadium, SoFi Center. And not only that, they've actually bought their naming rights of the entire sports league, TGL, presented by SoFi. And as you can see, everything around this, which could lead to hundreds of millions of views per year, or potentially even per week. This is going to be a weekly show that's shown on ESPN, is splattered in SoFi, naming. Now, I've heard a bunch of people who do not follow SoFi that SoFi Stadium or purchasing the naming rights to a stadium is somehow an extremely bad purchase or that it yields no results. One, do you think that they outlaid $600 million for no results? And two, everything that management has said is that, SoFi Stadium has paid for itself and in droves. Like it's done everything they've wanted and more. Okay. It's one of the main things that is actually leading to new customer acquisition. And plus, whenever you go to those stadiums, let alone whenever it's being televised and everything along these lines, whenever you go to those stadiums, you get member benefits like shorter lines and 25% cash back for going to those places. Is that going to be a similar thing for SoFi Center that is going to lead to more people coming to that stadium in Florida? It's much smaller. I think SoFi Stadium sits like 70,000 or 80,000 people, and SoFi Center sits 2,000 people. But also, it doesn't mean that we paid the same amount. But it is a digital watched, or like it is a televised sport, and SoFi's name is going to be all over it. The thing that Anthony Noto has always tried to show off is brand recognition. Okay, you just need people, or brand awareness. You just need people to continuously see SoFi, and then whenever they're prompted with an ad to say, "Oh, we saw that you were looking for a home loan. Well, SoFi offers a home loan." There's something in the back of your brain that goes, "I know that company. I don't know these companies. I don't know if they're trustworthy, but I know that name. I know that logo." And they might end up choosing that one because that's the one that they understand. Okay? So it is true that some people need to see advertisements between 7 to even 15 times before they go and actually use that product. But SoFi is doing that. And because of Anthony Noto's background and understanding sports, because he literally was the CFO for the NFL, he understands that this is a very fast growing industry. Sports and online watching of sports is extremely competitive. And Netflix is now getting into it. Amazon, all these companies are all getting into it. But Anthony Noto can't control the streaming rights. What he can control is the actual like stadiums that they play in. How do I get my name where Netflix can't remove it? The stadiums. So, yeah, just very exciting that way. More customer acquisition, more growth. Everyone has seen SoFi's, revenue over the last little bit. I mean, it's grown like this, but the growth rates have been slowing. I think what's very hard for people to try to price in, and potentially why Palantir is just skyrocketing right now, is whenever revenue growth rates, not revenue, but revenue growth rates start to invert and start to climb again, completely changes the way people value a company. Okay. Could 2025 be that year where SoFi potentially asks for 30% growth in revenue, or potentially a little bit higher than that? I'm not calling for anything crazy, but 30% is well within SoFi's range. All right. If lending, financial services, and Galileo hits off, they could potentially even get into new products that we're not even thinking about right now. There could be a lot of growth here. SoFi is not running up for any good reason. You don't think that institutions are buying because they have it? Not only is SoFi not running up, but Lending Club. Here, take a look. Let's take a look really quickly at Lending Club. SoFi's not running up for any good reason. You think Lending Club, just on a random day, on a random whim, goes up 8.15%, then in after hours goes up another 2.3%? You think that that is, people just saying, oh, well, now at highs, we want to buy in? Or do you think that there was some report on Bloomberg that was like, oh, debt markets are showing the strongest activity that they've seen, in the last 12 months. And people are like, all right, well, who are the biggest benefactors? And then they go out and buy all these lending companies. So it's not for no good reason. There's regulation in good standing, potential loan activity that would be really revenue producing. And then if things like stock markets are going up and people are like Amex just put out a report that, credit defaults are steady, that this does not harm SoFi at all. Like all the data is pointing to healthy things for SoFi, not negatives. It's not at random that companies go up 8% or even SoFi up 4%. And that too, Wes, crossed the $18 billion market cap. Could SoFi potentially see themselves getting into the S&P 500? Now, it's not going to be anytime soon. I got to be honest with you guys. Like, it's a very, very small margin that they get in at 2025, but it's not impossible. Tanner, why do you waste your time with these stupid comments? Because I think that internally there are a list of people that do believe in it and or are thinking it, or potentially scared to ask it. And so I'm not just answering it for one commenter. I'm answering it for the many that might be thinking these types of things. I think that gradual changes in stock prices are like I do think that there's a market fluctuation that happens at whim. Like, people trade, right? But whenever you start getting into the really, like, you start passing, 4 or 5%, that's on some level of news, sentiment change, revaluations, analyst stock price changes. Something changes in order for that to happen. Speaking of Lending Club, how is it higher than SoFi? Blows my mind. It blows your mind because you're new to the stock market, but I'll teach you. Okay? And that's perfectly fine. That's perfectly fine, but we're all here to learn. So it's not at all, and it's not even close. Lending Club, $17.91. Market cap, $2 billion. SoFi, wherever it was, 1688, a little bit lower, market cap 18 billion. SoFi's not smaller than Lending Club. They're actually 9 times larger. They just have more outstanding shares. And I'm not just answering that for him. I'm answering that to the many that are looking at these two companies and are potentially newer in the investing world. So there's a stock, which is the total company, and then the shares is how many things it's broken down into. Any thoughts on new? I've got some thoughts on new. Let's talk about it. This was a pretty interesting one. I just saw this. Is it Yevgenis? I still don't know how to say his name. I'm so sorry to him. Honestly, I'm genuinely the worst. But so the rumors of Nubank are true. Nubank is coming to Africa, and it's real. Nubank announces investment in Time Group, a digital bank with operations in South Africa and the Philippines. Nubank leads the Series D funding round with a $150 million investment. They have already 15 million customers. So that's what I'm thinking about Nubank. And that's not their first investment into other companies that are taking over in other areas. I think they have an Asian company that was it Southeast Asia? Or I'm starting to forget, but they have another fintech. I'll have to look up it in a second. Do these customers have money? So, I mean, they're probably not at the same level of GDP per capita as America. But one of the things that Nubank really strives in is growing in areas where those people are not as affluent as, North American users. The important part is that they're not paying North American prices. Okay. So if you pay for 15 million users in America, you could be buying a company like SoFi for 25 billion. But yet at 15 million customers, they spent 150 million. We don't know the percentage of the company, but I'm sure it's much larger than you'd get even remotely close to a percentage of SoFi. So do they have as much money as SoFi users? I would venture to guess no. I don't have that answer, but I think it's a safe bet to assume that it is a lower average revenue per user. But that also doesn't matter because it matters how much you pay for it. But like Nubank is literally doing exactly what they should be. They're taking equity investments in fintechs that not only can they monitor and see that they're doing very well, but they can also guide. They can add a lot of expertise to say, hey, this is what we've done. Now you do it, and we'll have a large equity stake. Um, all right, ladies and gentlemen, I had more things to talk about, like a firm offering a $750 million convertible note that has room to grow. All right, I got one more story. Hold on. I got one more story. FinChat put out a interesting thing here for you guys. You guys are going to love this. The 7 fastest growing consumer fintech apps. Cash App, the all-in-one personal finance app best known for its peer-to-peer money transfers, came 7th on this list. Okay? Then Dave, number 6. Number 5, Wise. I love Wise, by the way, not only as a company, but as a user mainly is what I'm talking about. Number 4, Remitly. But what are the next 3? Ladies and gentlemen, I welcome Mercado Pago or Mercado Libre's fintech, a company that I personally own. Nubank at number 2, the Brazilian giant. And number 1, SoFi. a 5-year customer compounding annual growth rate at 61%, dominating versus its peers. Insane. Thank you, FinChat. Appreciate that shout out. But thank you all so much for watching. Really do appreciate your time. If you're interested in Robinhood and want to hear about why it's pumping up to freaking $44 a share, make sure you check out the Robinhood Weekly. I'm also streaming it right here on this channel at 9:30 p.m. That's in 20 minutes. Bye for now.